The Institute for Energy Security, IES, is projecting that fuel prices are likely to go up at most 35 pesos in the second pricing window starting from October 16. Research analyst at IES, Fritz Moses, attributed the projection to increased prices for finished products on the international market and continuous depreciation of the cedi.
Depreciated marginally against the US dollar by 0.49%, closed the window at 6.08 cedis to the US dollar from the previous window's price of 6.05 cedis. Oil prices jumped on Monday to the highest level in years at $81.73 for WTI and Brent at $84.33, fueled by rebounding global demand that has contributed to power and gas shortages in key economies like China and Europe.
We expect that prices at the pumps could go up as high as 35 pesos addition to the current price that we are seeing. And so if you're buying it at, say, 60 pesos for well filling station across the country, you will see the price, you expect the price to not exceed 6.85 cedis per liter. If it was sold at around 6.52 pesos per liter, you'd expect it not to exceed 6.84 pesos per liter. So this is the estimation that we are making.
Focus on dividends by oil companies and pressure on government to transition to cleaner energy, as is happening in China, is also driving up prices of crude and finished products.
35 pesos is basically about 9.32% on the current price that we are seeing. And so if the price stabilization and recovery level should happen, it's not being kicked in or it's not kicked in, then the highest that it can go for the price increment to reach 35 pesos. But you'd expect prices, or we are looking at prices not exceeding or going down below 20 pesos in addition for this window.
The pace of economic recovery from the pandemic has supercharged energy demand at a time when oil output from largely OPEC Plus has slowed due to cutbacks from producing nations during the pandemic.
Let's speak with Kweku Ajmantria on phone. He is the industry coordinator of the Association of Oil Marketing Companies. Kweku, welcome to Midday Live. There are some projections that fuel prices are likely to go up by almost 35 pesos in the second pricing window starting today, October 16. Tell us exactly what we are looking at or what we are to expect.
Basically, we expect that the projection shows that we have petrol should be between 6 cedis, 88 pesos, and 7 cedis, 11 pesos. That will be a range. Then diesel will be 6 cedis, 82 pesos, and 7 cedis, 5 pesos. That is without the price stabilization, with the price stabilization margin in place. The price goes up. Then, if for any reason the government says there's a document in between there, then the petrol will be 6 cedis, 72 pesos, or the highest one be 6 cedis, 95 pesos. Then diesel will be a minimum of 6 cedis, 68 pesos.
Right.
Then the upper level to 6 cedis, 91 pesos.
Now,
but since we have not had any letter from MPA, normally the procedure is to have a letter from MPA indicating that that portion of the price build-up is being removed. We can act. So when they get it, we accordingly respond. Yes.
Right. Now, the projections have been attributed to increased prices for finished products on the market, as well as, the continuous depreciation of the cedi. Beyond these two, are there any more factors or undercurrents influencing these change?
Basically, is the exchange rate, dollar cedi exchange rate also. But the percent of the OPEC countries to make money within the short period is also what is also fueling the speedy rise of the commodities. Basically, they are looking at the fact that COVID made them to lose a lot of money, and now Europeans are trying to do this electric vehicles against them, and they can't allow their resources to remain on the ground. So quickly they have to make money for their people in future. So it turns out that it comes to a opportune time like this, when this year has been a little bit stable, so they want to cash in as much as possible. You could see that the parallelism we can also draw is that the crude oil price is shooting up quickly. You know, they want to make money within the shortest possible time, and that's really affecting them. For us, the homegrown thing is the city's vacation rate. Yeah.
Okay. You mentioned this earlier, but, give us some detailed explanation. The thinking of many was that if the MPA has approved a 2-month removal of the price stabilization levy as well as the recovery levy to reduce the price of fuel, why are we seeing the opposite?
Yes, basically, you realize that MPA has mentioned it. But the procedure is, we don't look at what is just said in the newspaper. We have to have a written document from MPA under the signature of the chief executive, right, that this one has to be done before we do that. Meanwhile, regardless, whether we put the MPA thing in and or not, the oil price is still going up, and we need to catch up. And this industry is full cost recovery. There's no way that we will get cost, which we don't have to recover. If you observe that ever since we have been on deregulation, there will never be shortage of fuel or gas, but because all the time there's money available to be able to discharge our liabilities when they fall due.
Right. Mr. Agyemang, thank you so much for speaking with us. We've been speaking with the coordinator of the Association of Oil Marketing Companies, Kwaku Agyemang. Let's move